There we go. All right, so my goal, I'm just going to kind of start. I'm going to go over some of the trades that I took last week. So, and then let me keep the channel chat open just to make sure I'm not missing anything. But so I took NZD USD was a winning position I took. Actually, let me drag them up here too. I took GU break even and then an AU loss. So we'll start with the loss here. Pretty standard, honestly. I just kind of saw all the rules met. So I saw my sweep on liquidity here, followed by my break of structure. I personally always like to see a candle close above the high. And then we got about a few FVGs in the range. I don't usually mark them all up, but pretty standard trade here. And then you can kind of see just got wicked out on my MT4 there, took the loss, and then it did end up running to the desired target anyways. But you know, that's just part of trading too. I saw a few people take this loss and kind of get a little upset about it. But there's plenty more of these to come. Honestly, this is pretty common occurrence, especially when I used to be a lower time frame trader too. So it would happen all the time. So that's one loss. It's a -1. And then I had a pound US dollar position here. Let me extend my, sorry, I have OCD. So if you see me messing around with my charts so much, sorry, I'm just trying to keep an eye on chat to make sure I don't miss any questions or anything. But we do have, this is kind of how I mark out my ranges. I use the highlighter tool sometimes. And some of you might notice I am a bit more of a range trader. I like to take ranges where, you know, I can see the break of structure like this and have an expectation of retracing into the range. I know some people, they'll kind of take these extended ranges and stuff. I'm not too keen on that based on my testing. But same kind of idea here. So I saw consolidation of price. I see that price reaches below this area. And if you guys know from my liquidity video, when price is consolidating for such a long period of time like this, let's actually see how long of a period this is. What's going on, Luca? Let's see here. So from here to here, we're looking at about 6 days straight of consolidation in the market from this point to this point. And honestly, what that kind of indicates to me is that within the last 6 days, the only orders that can be placed are below this low and above this high. And it's because obviously if price hasn't reached anywhere outside of these ranges, then you can't place orders outside of there for the last 6 days. So what it does tell me is the majority of orders rest either below this low and then the majority of orders above this high. So when you see those orders collected here from a liquidity standpoint, they're exchanged into buy positions. And then you see price, obviously, once they grab this area where the majority of orders lie, they're going to then go and deliver towards this high here. That's kind of just a very basic understanding of liquidity, but you know, it's something that I do kind of keep in the back of my mind always when I'm operating in the markets, because I think it's important to just kind of understand the underlying reasons of why price is essentially moving. And you can kind of see a similar situation here. So it did end up tapping me into my position. We kind of played around in drawdown for a little bit, and then obviously started pushing up pretty heavily. So once it reaches the 0.5 risk to reward, that's when I go break even on my positions usually. And then, as you can see, we came right back down and swiped me out at break even. And then obviously kind of played around a little bit more. But another good example of a liquidity sweep here where we have a significant low that was put in the market. And then price reaches just below that low to then get enough of that, I guess, fuel to go and push price towards take profit here. So we got the -1 on AUD USD and then pound USD a break even, so +0. And then I had an NZD USD long. So another thing about correlation, I personally don't use it. But of course, these three pairs are correlated and they all seem to have a setup at the same time. So pound US dollar, AUD US dollar, and NZD USD were all bullish in my opinion. So same kind of idea here. I saw the markets consolidating for, this is even longer than 6 days. I think this was like over a week. And then as price continues to consolidate, one wick comes through and just grabs the ultimate low of this general range, grabbing that liquidity. And then kind of like we talked about before, once the low or liquidity is grabbed at the lows, they're then going to try and deliver price to the next highest point of liquidity, which would be the high of the range. So you can see price is drawn towards there. And then now once liquidity at the high of the range is absorbed, we can now push price back down into obviously my entry here. So I got entered at about, it was on the 30th, it looks like. I don't even think I noticed it till the next day, honestly. But I got tapped in. Same as usual, I went risk-free here at 1RR. And then this one, unlike GU, it actually did push to the take profit. So I ended up making +3 on that one. And then, did I have a sexy voice? And then I'm actually sick right now too. I was telling Sven before I hopped in call, I was like, dude, hopefully I don't sound awful, but I got my water next to me, so. And then I got these 4 at the moment pending currently. So I actually don't usually even trade Chef JPY. But I was talking to Sven yesterday. He showed me there was a setup on it, so I figured I'd add it to my watch list. You guys might know I'm a little bit more, I guess, lenient on my watch lists. Like, I don't mind adding pairs, taking off pairs. Actually, I don't typically take off pairs, but I don't mind adding pairs. Honestly, for me, it's like the more the merrier. Like, if there's more pairs here, the more setups I can look at. I've been trading this way for a little while now. It takes me about like 15 minutes to really browse through setups and stuff, so I don't mind if I add more pairs here and there. So typically adding or removing pairs, I'll be honest, I really don't remove pairs. I guess just from the standpoint, I guess the way my head works mathematically, and yes, I do set break even at 1R, Joseph. But I guess mathematically, the way my head works is just like the more pairs I have, the more it's going to kind of edge the data and make the equity curve a little more consistent. Versus, if you have less pairs, you're obviously going to be more susceptible to years of drawdown or years of great bullish price. But it kind of varies, obviously. I only tend to add pairs. For example, like when I see someone has a great setup on a pair that I don't necessarily have, that is with the exception of like minor pairs. I'm not going to trade anything that's, I'm not going to trade any of those, what are they called, exotic pairs. I'm not really a fan of those at all. But basically anything in the orange down here, a majority of them have kind of been added in as time went on. Like NZD Chef wasn't an original one that I traded, same with NZD JPY. But I did just kind of add them in as I got more comfortable trading. I feel like breezing through in 15 minutes or so, adding a few more pairs doesn't hurt, but it can obviously help hedge my data long term. And then, let me see here. You set it to BE if it wick. Yeah, so I actually use a trade assistant, so it's automated, which means once I'm tapped into my trade, as soon as price on my MT4 goes above that one risk and reward, it automatically moves my stop loss just a little bit above break even, like right about this level. And it kind of does that to offset spread or commission or anything. Doesn't adjust for swap, unfortunately, but swap can be positive in some cases too, so I guess it doesn't matter. But this is something I'm looking at, very basic. I figure that all the pairs go through seasons. Yeah, I agree with that. So that's one of the things too, is I know some people with this strategy, they tend to look at it from a pair-to-pair basis, which just, I'm a heavy math person, honestly. Like I am a statistics major too, like a data analytics major. And one thing to kind of understand is this strategy is not built on one singular pair. Like I can easily backtest a pair and get a negative year on it. And it's kind of expected in some cases to have a negative year on at least one of these 20 something pairs here, or more than a few actually. But the idea is how the data combines together, because obviously when you're live trading, you're not focused in on one pair for a whole year. You're kind of seeing how the pairs work together and how the edge forms in that sense. And I do find not only the more pairs you trade, but the more consistent you are with taking trades on all the pairs, they do kind of hedge themselves out. Is 3 negative years normal on 3 different pairs? Yeah, definitely. If you're asking like in 2023, are at least 3 of these pairs negative? Yeah, that's very likely. And it's completely normal as well, because I mean, if you look at it even from a very basic standpoint, if you have 3 of these pairs negative, the other 20 something are either winning pairs or break even pairs, which is clearly a significant edge over the market regardless. That's another thing too, is I find if you're negative with 3 in a row, it could be based on, I mean, it could be chance, obviously, but if you are negative with 3 in a row, you can, because I did mention the other day, if you can take pictures of those trades and send them to me in either DM or or in the server if you want as well. I can kind of check them out, because 3 in a row could be something where, when you're starting to test, there is a learning curve with the new strategy. Like, you're going to have to get used to seeing the setups, learning what works and what doesn't. One thing I'm finding fairly common is that liquidity sweeps seem to be an issue for people. So I was thinking of tackling maybe a video on liquidity sweeps, or kind of going more in depth with it, because I have seen some kind of odd ones when I've looked at data from people in DMs and stuff before. But this is the Chef JPY trade, same as the other ones. Basically, I like to see a significant low in place, and then obviously price drove very heavily through that low, grabbing liquidity and then breaking structure with a candle close. All of the basic rules in the plan. We have the FVG present here as well. So then I slap on my 75% fib, and then obviously have this pending, and let's see. Yeah, that's very true too, Joseph. Like, I find if you test a pair 1 year versus another year, you are going to get very different data. That's another thing too. Some people think they should be removing pairs after 1 negative year, which is just not enough time or enough trades to kind of really get an idea of if that edge is working. Yes, you can. You guys can all send me trades and DMs to check them out, and maybe send data along with it if you want. Like, if you have your FX replay data with the trades too, I can kind of look at them. With this trade, are you worried your stop loss is a wick is an equal low? I did notice that too. In this case, not necessarily, because I try to avoid resting liquidity if I see a good liquidity sweep. The only cases where this would concern me is if this was what I'm considering my sweep, or if this was the low that I was considering that got swept, which in this case it didn't. But when I do see a significant low here that did get ran through with heavy volume and then obviously broke structure higher, I don't necessarily mind this equal low back here, especially because, I mean, I don't use higher time frame often, but when you do look at it from a higher time frame perspective, it's very obvious, this manipulation of this daily candle. When you see these heavy wicks on a daily time frame, like, there's a lot of volume that's necessary to create them. So I do expect price to kind of come back into this area where we know there's institutional involvement, and then drive price higher. If not, -1, no problem. And then we have pound CAD here. This was another one. I have to keep adjusting it because this is where my MT4 is. I'll have to adjust the high again, but same idea. We have a consolidation range for more than a few days. Price ends up running through the low of that range, and then we break structure higher very impulsively. And then obviously, we've kind of just been low volume messing around here for the past few days. Sometimes if this happens, I will actually remove the order, and just kind of wait it out until price starts getting a little closer. But it is Friday, so I don't really care to. I'll hold it over the weekend. But I do expect price to make its way back down into this fair value or into this demand zone, and then obviously run higher at my 75 level, hopefully. So we'll see how that one pans out. And then CAD JPY as well, pretty similar. I have a run on liquidity at the highs, and then a very impulsive break of structure. And I do think the impulsive breaks of structure is kind of important as well. Some people, I guess, neglect that a little bit. I think it's important because we're trying to, at the end of the day, look for institutional involvement. How long do you adjust the range if price keeps going up? This is something that I haven't established in rules yet, but something that I have noticed is if price were to continue running up and up and up like this, for example, and just climbing, and I extend the fib, and if this 50% ends up over the break of structure, that's kind of been, I guess, my soft rule at the moment of where I think price is running too far. Only because I just feel like if my break of structure is way down here, and then price is all the way up here, it's no longer a trading range. It's more like, a leg of price, and this could have come in contact with anything to eventually send price in the other direction, whether it be weekly time frame, daily time frame, whatever. But that is a soft rule at the moment, so it's nothing. I haven't really, I guess it kind of goes by judgment. If price just continues running, I'll just kind of end up deleting the pending if it's not tapping in anytime soon. And no, I do not use higher time frame bias personally. I have talked a little bit about this in the past, where I think higher time frame bias can complicate things in some cases if you're a smart money trader, only because there's a lot of variables that now brings into play. And an example of that is if I go and asked everyone, well, this is a pretty clearly bullish pair, but if I showed everybody in this call this range here and I asked them to establish a bias, we'd probably go 50-50. Half of you might be bearish, half of you might be bullish, just because smart money is very discretionary in that sense. Going on, Big Mac? Caught the game last night, I'm sure. But yeah, so it is very discretionary in that sense with smart money. Now, if people do feel more comfortable with a bias, I think there's better ways to go about it. Trying to make it a little more mechanical, even if it means, using an indicator, if that's something that floats your boat, like a 50-day EMA, for example, just because it makes it more mechanical and less discretionary. Only because I found, for example, if my higher time frame bias was bearish at the moment, but I saw this great bullish setup, I would end up sitting out of this setup. And if my higher time frame was wrong, I completely could miss out on a winning trade. And another thing, just mathematically speaking, is that a winning trade is worth 3 times as much as a losing trade. And if you consider bias to be 50-50, just mathematically speaking, it's almost insignificant to your entry model specifically, because I think it's more important to take a winner than sit out on a winner in fear of a loser. That's just how I look at trading, and I think it's probably a pretty good way to kind of get in your head that losers are not as significant as people tend to make them. They hurt more emotionally, of course. A winner only feels good for maybe a few hours for some people, and then a loser can hurt them for the next week in their trading when they're looking at their data. But overall, you got to kind of favor that winners are 3 times as important as a loser in trading. So holding losses too tight kind of just hurts the mental. Pound CAD that you're watching, if price sweeps the high and breaks the most recent low, would you be confident to trade that range? Price sweeps the high and breaks the most recent low, I would still definitely trade this range. If you're asking about anything within here, I just don't see this as too significant to price. So if we do end up sweeping the high and then making our way back down, it's probably even more likely, because I've kind of talked about before, when price consolidates like this, it kind of needs liquidity. It's actually generating liquidity so that the institutions can grab a significant point in the range and then use that to then drive price lower. So I probably would expect something like that to happen. It could crawl a little bit higher before we do see some form of retracement, but I'd still be perfectly fine taking this range. My only stipulation with this trade is if price continues to run, I'm going to question how long it will take for this trade to play out. I'm not the type of person who likes to hold a trade for 1 or 2 weeks, for example. So if this range does continue to grow and kind of not show any form of retracement, I will probably end up deleting it, compared to when you look at something like Chef JPY here, where it's a very small range, will be a very quick profit loss break even. And then I have CAD JPY as well. I did briefly go over this one, but same kind of idea here. We have a sweep on liquidity, and then we have that impulsive breakdown. Clear FEGs all in this range, 1, 2, 3. And but similar idea to Pound CAD. I'm not really seeing any form of retracement yet, but I will wait it out. Yeah, I think a short can be valid as well within this range. Personally, I'm kind of a little more passive and patient with my positions. But if you do see a sweep of a high and then a break lower, I do think some form of short in here is valid. I personally probably wouldn't, only because, like I said, I like to be a little more passive. I set my orders, I sit back, and I kind of, let price develop. But I do think that's a valid trade if it follows all the rules once it does set up. Yep, the long remains valid, yeah. And then I have Euro JPY, which this one I'm actually tagged into already. So I am break even on this one. Same idea. It almost looks identical to CAD JPY, where, at some point, that's why we push testing a lot here as well, is it comes down to a pattern recognition, I guess, standpoint, where once you start seeing this entry model or pattern a million times over, you're going to continue to kind of just get used to seeing it and, more or less hesitant when it does pop up. But a sweep on liquidity, even in a bullish market like this, this is something that some people fear, is those counter trend trades. But once I do see a run on liquidity and then a very strong breakdown, it gives me a good indication that the market might be shifting. And as long as my entry model is met here, that's all I care about. It's another reason why I kind of ignore bias. I don't think it's too significant based on the entry model. As long as you're seeing the key points that are necessary as well. Like, the very key points are a run on some form of significant liquidity high, and then a very impulsive breakdown. Because once we see this impulsivity here, it's one of the clearest indications that institutions are on this side of the market. They're more likely on the bearish side. And then if we see price crawl its way back up here, it's because they're mitigating to then continue that bearish price action that they're kind of just starting to instill. CAD JPY, if it kept consolidating, honestly, with this one, probably similar to GBP CAD, where, you know, if this just continued to consolidate for a long time, I'm going to begin questioning, you know, how long would this trade take to play out, and possibly delete it. But for me, it's mostly just a time thing. I don't like to be sitting in trades for days at a time, if not weeks at a time. You know, I've had some trades in the past that last like 2 weeks, and it just ties up my margin. I'm not a fan of that. But for the more, you know, I guess it's a little bit more of a longer term position. But you can kind of see here as well, I don't use daily too much, but for confluence reasons, you know, I could see these two daily equal lows that are very prominent as well. So I do kind of expect price to come back up in here, and if it does end up making its way to my entry, most likely coming to not only target these lows, but here is a significant amount of liquidity in the markets, because as we talked about before, consolidation like this is a clear indication, especially when all these lows, sorry, I'm like a scribbler, but when all these lows do kind of line up like this, we know there's a lot of stop losses resting below this area, and the markets kind of gravitate towards stop losses because it's almost like markets work like a magnet towards liquidity. So this is an area that I do think long term might be something that price comes to target. And then, of course, Euro JPY, which is what I'm in now. Now, this one, too, is another one where, personally speaking, I think if I were to continue using bias, I would not have entered this. But obviously, I entered it, and I have my break-even rule in place, which kind of helps me out. But I wouldn't have entered this simply because, you know, we can see a clear manipulation zone, kind of like we talked about before, where these heavy impulsive wicks on the daily time frame require a lot of institutional involvement. And then they create a break of structure. So this is kind of the range we're working within from a higher time frame perspective. So I do think price can possibly run bullish from here. However, like I said, I don't use this, and the reason being is with a rule like break even in place, my rules were met here. It tapped me in. It at least got me to my risk-free point, and now option one is I lose no capital here and it runs bullish, and, you know, no harm, no foul, but I did have a chance at a winning trade. Or option two is obviously price can continue to run and then I win the trade. So it kind of, I find the break even rule is one of the main reasons I don't need to or feel as reliant on the higher time frame bias, simply because I think it's just kind of like insurance. If I do get tapped in but I'm on the wrong side of the market, I can kind of get out of the trade without my capital on the line and let it do its thing. Need to drink some water. I've been feeling sick all morning. I'm like, my voice is killing. On CAD JPY, price pushes down beyond the recent lows. Yeah, that I think I would definitely cancel there. So you're saying if price did come down past here, I would most likely cancel. That's when I think the range, in my opinion, is just getting a bit extreme. All right, and then if you guys have any more specific questions too. Yeah, I know. I can't even join the lives when Sven does them because my time zone is so, like, it's 8 a.m. here or 8:30 here right now. But I'm kind of glad too because it helped us split up. Like, you know, there's a lot of people who couldn't join his lives that can kind of join this one now. Kind of factors to extend the range or invalidate. That one's tough. I honestly don't have anything concrete for it, I'll be honest. I guess I just kind of base it off judgment, where if price continues, I did mention like that one little trick that I've been talking about lately, where like if this 50% line is beyond my break of structure markup, I do kind of consider that running a bit extreme. But for some trades, it's like it more comes down to, do I want to sit in this trade for weeks if that occurs? Like, if this runs any further, I do have a feeling it won't even tap in. The time for price to come all the way back up to my entry could take a week or two in itself, let alone actually, stop loss break even or take profit, how long that could take. So I kind of base mine off loosely off of time. I'm kind of the type of trader that just likes to be in and out of my positions, within a few days. I don't like to be sitting there for multiple weeks collecting swap and just waiting for positions to play out with my margin tied up. Let's say Euro JPY goes here TP and then retraces back and leaves imbalance. Would you enter that without a sweep? Yeah, I get what you're saying. You're saying, personally, that isn't, I wouldn't consider that my style of trading. I don't think that's an invalid trade, though. I think it would be perfectly valid. I'd like to see a sweep occur because I feel like it kind of gives me a better judgment on what I consider a strong low or a strong high. So, like, people that have known, like, me for a long time and have learned from me for a long time, like, when I see a range, the market can crawl like this forever. And just, this is a picture perfect world of market structure. But I don't consider any of these lows as strong as one that does come and grab liquidity and then break. I consider this to be the strongest range out of anything we just saw back here. Simply just from an institutional standpoint and kind of understanding that once orders are grabbed down here and absorbed to then drive price bullish, this becomes a low where there's not a significant amount of orders below, and the majority of orders now rest above this high. So price will come and retrace into the range, and then obviously target that next point of highest liquidity. However, if you do trade it in that way that I'm talking about now, where I kind of do prefer a sweep every time, you will have less trades, but I do find they're higher quality as well. It's kind of a trade-off. Notice on my back testing, I wait for the sweep. The break of structure is so strong. Yeah, that's pretty common as well, though, especially just with the higher time frame in general. You're definitely, like, price is definitely going to run. A good example is I had this trade on the same pair. And, it's just kind of, it's very common that with a higher time frame, you might see price just run away. You can actually kind of even see here, if I did drag my original position out or, maintain it, it would have tapped in. But like I said, this took weeks to just kind of consolidate, and I didn't really want to be involved in that. But for some people who are willing to hold that out, you can see it even would have worked in this case, and you would already be break even and possibly going for take profit. I'm just not that kind of trader. Say it drops, create an equal low. Do you wait on the retracement? Take the short. I'm not sure what you, in this case, are you saying, Joseph, or like a different example? It drops to create an equal low. Do you wait on the retracement to take the short? The previous pair. I see what you're saying. Like, if it comes down here, creates an equal low. I mean, at the end of the day, I would, I guess. My biggest stipulation is time, like I mentioned. But if I see triple daily equal lows at that point, I mean, it's something that I'm willing to kind of just wait it out. But yeah, I'm mostly just more worried about the time. Like, I don't want price to run all the way down here and then have this pending now sitting for weeks. One thing I might do and have done in the past, though, is if price is running substantially far, I might just end up, deleting the pending and waiting for a retracement. And then as that retracement gets closer, kind of like probably what's going to happen here. If price kept messing around in here for a long time, I'll probably just delete the pending so it's not sitting. But then if I see price start coming lower, I can add it back on. Just because I don't like, too much risk of my account on the table at once. I do trade personal capital. So, I don't like having a bunch, like 8-10% of my account just sitting. What if it wicks slightly? You would remove it right on this CAD JPY. Honestly, probably not. Like, if it just wicks this low and then starts coming back towards my entry, I will say it's more likely grabbing this equal daily low liquidity to then run the high, but it's not really something I fear. Like, losses are just honestly part of the game. Like, there could be a million reasons why I look back on a trade and tell myself, oh, I should have deleted then, or I shouldn't have held it. And at the end of the day, like, I feel like once you get more comfortable data-wise, or just like longer.
Sin City wasn't made for you.
But I feel like once you get more comfortable longer term, you just kind of, it doesn't really, it doesn't really phase you, I guess. God damn, that scared the fuck out of me. I forgot Sven put a soundboard on this. I always remove it as soon as it breaks low. Yeah, I mean, that's fine too. But yeah, if it breaks the low and it's like a rule you have that if price retraces and then breaks a low to remove it, I know like Andre does that as well. Yeah, that's perfectly fine too. I think like when it comes to a lot of these like minor pieces to the strategy, it's not anything that will long term affect your data too significantly. I think if the core principles of like a liquidity sweep, a heavy break of structure, candle close, if that's your rule, and then of course showing like fair value or imbalance to kind of show that institutional involvement is present. I think if like the core values are there, any of these minor things like a break even rule or when to delete pendings, a wick versus a candle close, things like that aren't necessarily going to destroy your edge long term. So I don't dive too deep into those things. I just think that a lot of it comes down to being able to trust the way that you trade it, especially through backtesting and stuff, and kind of then go and replicate that in the live market.
Can I ask a quick question?
Yeah, what's going on?
So I'm about to enter an EU trade. I've got an order set.
Mm-hmm.
Obviously, this news has just happened. Would that candle stop you from taking the trade? Yeah, that's it. Yeah.
Personally, no. I don't even have this one on, but I do think it's a good trade. I think Sven has this one. But like I said, some trades slip through the cracks. Like if I don't even browse through the pair, notice it. But personally, I don't really mind something like this. I've seen plenty times where a news event will tap me into a trade. Like I've even had FOMC tap me into my trades and then go and run. What is this? NFP maybe? What is it? Friday?
Yeah,
I think it might be
it's
NFP.
first Friday. Yeah.
But yeah, I mean, this looks like a pretty good trade to me overall. Like I see a great run on liquidity here, and then a strong break of structure. And then of course we have our 75 fib. There's plenty of fair value in the range. Some people I do notice being a little extra aggressive. This is something beyond my means, but I do notice some people trying to enter something like this, a very small range. That's when obviously a news candle would hurt, but I really don't see this being a bad position at all. I don't rush into positions and put them on once I see them like this. That's another thing I try to, it's just a little mental cue that I've learned over the years in my trading is when I see a trade about to enter that I missed or didn't place or anything, and I go to very quickly place it, it leads to mistakes, so I'll sit out this one. But I do think it is a good trade. Mark it up, though, just to keep an eye on it. So, would you advise against the smaller range? I personally just don't have enough, I feel like, experience or testing with those tiny ranges to kind of, vouch for them or not. Not something that I just find it to be not only very aggressive, but one of the more I guess favorable qualities of this strategy for me personally is the time frame. Like I can hop on once every day, once every 2 days. It's kind of very passive. When you do start getting into ranges of this size, if you're not hopping on within the previous, 12 hours, you might end up missing the entire confirmation. Like by the time this closed above the high, you have a few hours here to then go, and obviously price did consolidate after, so it didn't tap in, but I prefer to avoid ranges that get too small to the point where like I have to be on the charts every 12 hours, and really monitoring every setup that closely. But I don't think it's bad. I've seen plenty of when I do get some of you guys sending me your trades and DMs and stuff. I see plenty of these taken and they do end up working well. But it's definitely a more aggressive approach than something I'm used to. On a pair that has a clear sweep, break of structure, but the imbalance is super low. So this is something I think Sven and I would probably have a minor difference on, but I don't think it matters, to be honest. It's kind of one of those minor nuances that I mentioned. I think if the imbalance is way up here like it is, or if the imbalance is, there's a tiny one down here, I really don't think it matters. The main goal of seeing that imbalance is the institutional involvement. And yeah, you definitely can, Joseph. You guys can all DM me any trade images or data or anything. I can check them over when I got time. But anything minor like that at the end of the day, that imbalance is just to just kind of show that institutions are on the side of the market that your position is. So when I see very heavy volume like this, it shows me that more likely there's institutional buying power in the market versus selling. That's kind of all that is. It's a slight indication of that can be quantified in like a basic rule form. Otherwise, it can get very discretionary if I sat there and said like, oh, you need a big candle that goes in your direction. If that was a rule, obviously, what quantifies a big candle. So we kind of use an imbalance as just a way to quantify and make it a little more objective as well. But I don't think it matters where in the range, honestly. I've seen plenty cases work out where the imbalance is all over the place. So what else do I got? I'm just kind of browsing through, and this is another thing too. I tend to avoid. I see some people, they're taking positions that are like, they're trying to farm some position out of something like this. I just really tend to avoid, if price is moving sideways, don't bother with it. That's just my experience, I guess. Um, let's see. Especially stuff like this too. There's no imbalance anywhere in sight. It shows no institutional involvement, in my opinion, and it's just like there's no need to be trading this pair at the moment until it kind of starts recovering. Very ugly. This was another one though. I did take a break even on this one. This was not last week, a little before, but what's going on, Tommy?
How are you, bro?
I'm good. I'm being good. Oh yeah, and then this is another break even I took. Good amount of break evens with the strategy, but I honestly think it's kind of, in my opinion, the point of it is like if you can hedge against those losses with a lot more break evens, helps my data
Mate,
and equity curve.
you should have setting up nicely after news.
Check it out.
If we obviously get a full break.
A break up here, take a long.
Yeah, I've got a lot of retracing to do after this week of dump.
What time is it? 8:42. I was gonna
Oh,
go through
it's an NFP later, I think.
would that USD chef be a clear sweep? It can kind of
Sweep.
depend. For me, honestly, I don't know if I would take this position just because the sweep is not terribly significant. But I mean, I still don't think it's a bad setup. It will follow the rules for most people. It just kind of comes down to like the more you test, the more you get comfortable like with seeing the setup. It'll jump out at you. It becomes second nature at some point when you've seen the entry model 1,000 times. I hate to say 1,000 because that's a bit excessive, but I've been trading this way for a while. So, but when you see the entry model plenty and plenty of times, you're gonna get more used to like knowing what you take and what you took in testing and how it performed. Obviously, I haven't seen too many of these types of trades in testing, but that doesn't mean that someone else hasn't. Yeah, this is awful too. USD CAD. USD CAD's been ranging for ages now. I did manage to squeeze out this winning trade a couple weeks ago, but I can't stand when prices like this. These are like, I find a lot of people, and like for you guys watching, the people that can recognize something like this is looking very ugly very quickly, it leads to avoiding so many more losses than necessary. I'll see people take all over the place, a sweep, a break, a trade here, and then they see a break, a trade here, a loss, and then they see a sweep now and a break here, and it gets messy so fast. Like the more you can avoid these sideways ranges, the more you're going to avoid not dumb losses, but unnecessary losses, in my opinion. I think being patient just overall is going to prevail. Hey, that's my trade. Yeah, I think you did send me, is it this USD CAD short here? Something like that. Or was it this one? Forget. Yeah, I ended up taking this one. Even then, I was hesitant because of the break here, but it candle closed, so I took it anyways. The one you copied from me, yeah, you're right.
You in any
Gave me,
trades right now, Dre?
Kadir gave me a call out. Let's see here. I was showing, so I got Euro JPY is what I'm in at the moment. That's the only one that's active. It might
Yeah, that
even break even pretty soon.
yeah,
But
news weren't friendly for that.
and then I got just a couple
Did you just
pendings.
did you have AU set pending or no?
Uh, I did not know. I took the loss here. I didn't even. I see what you're saying though. You're saying this sweep, this break.
Yeah, yeah. I've just
Yeah,
got tagged in.
I could see that too. Yeah, that's something I didn't even notice. But yeah, we were talking about EU as well.
Yeah, it's just a problem. I've just been tagged in on a Friday on Cortana, so it's not brilliant, is it?
Yeah, you can. I think you can
I
email
might
them.
just hold it. Oh, I
You
can
can.
email them.
I'm pretty sure you can email them and ask to hold over the weekend, and
What,
should be good.
Cortana? I thought that was
Yep.
only a Nova thing.
No, I mean Cortana. I've done it before too. Cortana. The thing I found with them, obviously my
They don't.
account's banned now because everybody hates the U.S. traders. But
Yeah,
the thing I found with them is honestly, if you keep your payout at a minimal area, they're not going to flag it. So
yeah,
what they were doing is like if people were on a 200K account but they got say a 5% payout, they're going to pull out that rule book and start going through all the the little intricacies of it and try to tag you on something. This happened to Goggins, for example. But if you if you just kind of keep your payout small, 2% for example, they'll pay you out, and they won't even really look at the rule book. Because I got a small, I think my first payout with them was like 2%, maybe like 1.8%, and they didn't even flag me. I held through news. Even one of my trades got tapped in by FOMC. Like they don't tend to care about those nuances if the payout isn't ridiculous or something that's gonna break the bank. But yeah, I guess I'm done with firms now for good. The U.S. banned all. I don't think there's any working firms for U.S. traders right now for foreign exchange. So I moved over to my personal a while ago, but
or even
yeah,
FTMO. Didn't they bring
uh,
out C Trader or something? Was it not C Trader?
no, DX Trader, dude, that thing
That
can't
shit.
even. But you can't. Well, FTMO, me and FTMO have a complicated relationship. I was funded and then they moved over to DX Trade. I physically could not use that platform. Like the data on DX Trade was completely different than anything I was seeing on TradingView. So it made it nearly impossible to even place a trade because it's kind of complex to explain, but like if I wanted to place my entry here on DX Trade, it wouldn't even show candles in this area. Price action might have been like up here, and I'm trying to place an order down here and it wouldn't let me. And so I just ended up, I let my FTMO accounts die. They kept emailing me like, "Oh, if you don't trade on them, we're gonna shut them down." And I just kind of let them die out but you also can't buy new challenges if you're a U.S. resident with FTMO. So those are my only ones. And so yeah, even I was funded with Cortana, obviously the my Forex fund situation, and I'm at a point where like I feel like my Forex funds for a long time, I was funded with them for almost about 2 years actually, and most of my payouts just kind of went into personal account or my investment portfolio. I didn't really use much of it, so I feel like I set myself up well with that. Versus like I know some people who literally their whole livelihood just got crushed when my forex funds got shut down. But I'm kind of done with the firm scene. If a new more reliable firm comes out in the U.S., which I don't see it happening just because of regulation, but I'll give it a shot. But even something like the IC markets, they have that new firm, but any new firm that's coming out like that, they're like without even starting, they're already saying they can't take on US clients. So it is what it
Move
is.
to
Yeah, I know, right? I guess I gotta move at this point. You got any
yeah.
rules on maximum trades active? When it comes to my personal account, I I think it's more of a mental rule than anything, because I do risk 2% on my personal account. Um, and number one, margin comes into play when I do risk 2%. I have 1 to 50 leverage with Forex.com. So I find it depends on the stop loss, obviously, and the lot size, but anything over like 5 trades, I won't even be able to place it due to margin. But the other thing is just kind of mentally, I don't like to have like 8 to 10% of my account on the line at once. I like to be a little more conservative. So like right now, I have this pending, or this one active, this one pending, and this one pending. And then I added Chef JPY yesterday. So right now, obviously there's a break even, but I do have about 6% floating of my account active at the moment. But I just don't like to go any higher than that. But it is personal capital, so there is no rule against it, I guess. I know some people, they're in challenges and stuff. I highly recommend at least keeping it under that 5% drawdown, if not 4%, to make sure that no swap or spread or commission kind of push you over that daily drawdown limit. But yeah, I don't know if there's I don't have any specific like concrete rule about that. I'm looking at an NZD CAD long. Would that be an okay trade? Let's see. Do I even have that pair? I don't. Interesting. Let's see. I'll be honest, once I pull it up, if it doesn't stand out to me right away, I probably don't think it's a good position, especially if you're referring to something like this as your low, because we got to keep in mind this is definitely a what I would consider consolidation. And with so many wicks resting in a certain area, it's far more likely that that's a point of liquidity that price is definitely going to draw down through, even this, for example. And this is kind of why the liquidity sweep rule is in place. If I saw something like this, for example, a nice wick that was formed here, I think this would be a much higher quality trade to take. But the fact that price is consolidating in what I would consider sideways, especially with this great amount of wicks here, I do think there was no liquidity sweep present here. So without those fundamental rules of the plan, I think trades are definitely less quality, less probability. That's another thing too, is some people, they tend to treat this strategy as if it's a market structure strategy, and they just kind of, mark up their basic structure like this and then take positions. I do think that's it's not going to work out or have an edge long term. And I also find in DMs when I get people that send me data that's kind of struggling, it somewhat resembles what I'm showing here, where it's just market structure trading, kind of neglecting some of the other important rules. I've been in IML, Joseph. That was how I got my start in trading, unfortunately. I think it was about 2 to 3 months before I realized it was a scam. Maybe 2 months, I think. But I did learn the very basics there, so I guess I can, credit that. Like I learned lot sizes, I learned how to place orders, what Forex was. But anything beyond that, yeah, it was a complete scam. That company, but it's a multi-billion dollar company, so they're doing their thing. Make sure I'm not getting any questions here. Did they pressure you all the time? I mean, the only pressure is to sell to other people. Like it's a pyramid scheme at the end of the day. So, if a good example is I think I was paying 250 a month, let's call it, for the 2 or 3 months I was in there. And my price being 250 a month, if I got a buddy to sign on, like if I got you to sign on, I would only pay 125 a month now. You would be paying 250. And then if I got two friends to sign on, it was free. So they kind of just pressured you into I guess selling to your friends and stuff so that you could, they could obviously make more money, but you pay less monthly. But trading wise, the education was horrible. It was very weak. I don't think there was very few people in there that actually knew how to trade. And that's coming from, even at the time I was a retail trader, I didn't really understand anything about the markets, but I could kind of tell a lot of BS was going on. A good example is this valid structure or is it internal? I think that looks pretty good, Big Mac. I think it's got a solid sweep, solid break. It kind of just depends on your preference there, but I would say that's a pretty valid trade in my opinion. But yeah, I kind of realized it was not a scam, but I was learning like head and shoulders, support resistance, things like that. And the mentor that I was in a live call with mentioned something called an institutional candle. When he never taught us that, he was like, "Oh, I gotta wait for this institutional candle to form," and I've never heard of that. And for those of you that don't know, institutional candle, it's like the same thing as an order block or supply and demand. Um, so he was mentioning SMC while teaching us retail concepts, and a lot of those mentors will do that because they know it's much harder for people to gain an edge with retail concepts and kind of just I guess they're trying to screw over their students. The longer they keep them in there, the more they make from recurring payment and stuff, which is a bit ridiculous. But yeah, that company, very toxic, not a good play. They're under like multi-million dollar lawsuits anyways at the moment, but it just sucks because it's like it really goes to show this industry like marketing is number one and trading knowledge is number two. Like if you have good marketing, you're gonna succeed no matter how fake or fraudulent of a trader you are. But just how it goes. I've been in the mentoring space for a while now, and I feel like that's like my biggest pet peeve with it is just like the amount of scams in this industry has led millions to quit at this point, probably, if not more. Like people get into Forex and immediately associate it with a scam. But it's mostly because of people like IML Academy or these massive corporations that kind of take advantage. All right, well, it's almost been an hour. I'm probably about to wrap it up. Is there any finishing questions before we close it out here? And obviously for some of you guys as well, I mentioned, yeah, no problem, Luca. But obviously, like if you guys want to send any trade images in DMs, or show some data, I do know, some people share me FX replay data. I do appreciate, I need the trade images in some cases. Like I can look at data and see, it's bad or good, but the only way I can really like give proper advice is looking at the actual images of the trades that created the data. But yeah, no problem, guys. All right, but that should be all for today. So I'll end up seeing you guys next week, and have a good weekend, everybody.
Cheers, Jay. Have a nice weekend, bro.
You too, man.
Yeah, you too.
See you.